Good morning from London. I'm Anna Edwards alongside Guy Johnson. We're an hour away from the opening trade. Here's what you need to know. President Xi Jinping hosts Russia's Vladimir Putin and Indian leader Narendra Modi, resetting relations for the three countries facing pressure from the US administration. The legal fight over President Trump's global tariffs deepens after a federal appeals court rules the levies were issued illegally, extending the chaos in global trade. And French Prime Minister François Bayrou acknowledges that talks with political parties may fail to save his government from being ousted. Opposition parties talk down the prospects for their support.
1st of September, the American markets are out for the obviously misnamed Labor Day. They're on holiday. I just point that one out. But elsewhere, there's actually a few interesting things happening this Monday morning. European futures are a little bit positive, but the story's not there. The futures are out in Asia, because that certainly is the story being delivered by Alibaba. It is pointing to a strong future in AI. That's where the narrative is shifting at the moment. How does that affect maybe US tech multiples going forward from here? Alibaba, on the back of its numbers, up by nearly 19% on its Hong Kong listing. Euro-dollar fairly flat, but we're up. The dollar's generally down, kind of on the back foot. The real story elsewhere in other markets, though, is also in what is happening in gold and silver. Silver's through 40. Gold is chasing a fresh record high. We've got all of that to talk about. The countdown to the opening trade starts right now. Monday morning, good morning. Lots to talk about, despite the fact that the American markets aren't with us for today. They will be back tomorrow as we work our way towards the end of the week. And, of course, the NFP number, which we're all on tenterhooks waiting for. But the geopolitical spotlight now turns firmly to China. It was there yesterday. It's there today. Over the next few days, it will be there as well, because global leaders are gathered there. Obviously, this is not Western leaders. This is China, India, Pakistan, Russia. Lots of really interesting countries coming together. In theory, they all look very united because they don't like Trump. But
yes,
are they as united as they appear?
Yes, nothing like a common challenge to bring people together, and that seems to be what's happening here. So this is the Regional Security and Economic Summit, as you say, taking place in China. We had some of those meetings yesterday, some of them continuing today. So China has met with India, and India has met with Russia. So all of these meetings carry on. But the big picture around this is, as you say, the role that the Trump administration is playing here, even though, of course, it is not on the ground. But criticising India's relationship with Russia in particular, and the fact that there's that oil trade that goes on, that's been a big topic. And so the extent to which the Trump administration's policies are having this sort of unintended or maybe even intended consequences is interesting to watch.
I think the nuance is really important here. It's really interesting. Narendra Modi went to Japan before he went to China, just to kind of maybe keep a few balls in the air at the same time, not putting all his eggs in one basket. How many more of these can I deliver? But I think he's being really careful. And he's also not sticking around for the military parade, which is going to be taking place as well.
He talked to Zelensky as well before meeting Vladimir Putin, which chimes in exactly with the theme you're
so I think he's been quite careful. So this is my point, really, about the fact that this is not all it appears. This is a loose gathering of global leaders that don't particularly like Trump, but not quite so sure about each other either.
Yeah.
So you just wonder whether or not actually we read too. There's a danger, I think, in reading too much into this.
Right. Yes, and in fact, maybe they are keeping options open. Let's transition into the part of this conversation that takes us into how the Chinese economy is doing. We've had pretty mixed data out of China over the weekend. The official PMI looking kind of sluggish. The more private sector-facing PMI looking more positive. In fact, beating every estimate out there. Commodities are responding divergently to that. We've got copper prices going higher. We've got steel and iron ore prices coming down. So it seems we're still struggling to get a decent reading on what is happening in China. But we're coming off a really strong run for the Chinese equity market. The CSI 300 in the month of August up by 10%.
Let's talk about the tech stocks in just a moment. Just with the metals, they've had a good run recently as well, so I think that needs to be borne in mind too. And just keep an eye on the effect that could have on the European miners, particularly the London miners, first thing this morning. The tech stock story, you bring up what's happening in equity markets. Baba's up. The Hong Kong listing, US listing obviously closed today. The Hong Kong listing's up really strongly on the back of this, which I think is fascinating. This is a stock that trades on circa 15 times. Amazon, which I think is probably the nearest competitor in the United States, trades on 34 times. And there's all this kind of AI story that's swirling, beginning to bubble up in China, beginning to gain some traction. Yes, it's not there. Yes, it's not able to compete directly, with the US.
Yeah.
But the US multiples, do they really stack up when the rest of the world is coming for the same business and is very good generally at commoditizing it? That's a question that I think is going to be very pressing. Going into the end of this year. So Bubba, I think, is a really interesting trade to watch out for. Let's talk about another trade that we're watching out for as well, and that is what is happening with all this tariff turbulence. The headline is, US trading partners are dazed and confused. I'm not sure. I'm not that dazed or confused about what is happening here. Trump, the Liberation Day tariffs have been declared illegal twice now. You initially had the International Trade Court ruling them illegal back in May. Now you've had a federal appeals court ruling that they're illegal as well. Basically, this is the idea that tariffs are meant to be the designated area of Congress, and Trump is using emergency legislation to get round that. Ultimately, though, we're still in the same place.
Yeah.
Supreme Court is going to rule at some point. The US administration doesn't have to file until October. The tariffs are still in place. They haven't taken them away. The court hasn't disbanded these tariffs, so they're still in place, so they can still collect this. It's likely the Supreme Court will take its time maybe to rule on this, so it could be into the beginning of next year before this changes. So nothing is going to change between now and probably the beginning of next year, so they're going to continue to collect these tariffs. And ultimately, all Trump has got to do is go to Congress and go, can you pass this piece of legislation? And they do that. Courts go away.
So I suppose our default thought, as we've seen other legal challenges, is this is an administration that will find other ways to get its way, to put its will in place in this particular area of policy. And so that maybe is why we are seeing quite muted response. I thought maybe we would see some response, but virtually nothing. I mean, if you look at US futures, of course, they're closed today, the US equity cash markets, but we've got futures, and they're really not doing very much, down 0.1% on E-minis. I will just flag, there's a lot going on in Asia, and we've talked about some of the tech rally. There's an area of strength there, but there's some weakness in other tech names coming under pressure. But we might not be dazed and confused, but to your point, maybe we are medium term a little more confused. Looking at South Korea, the Kospi and the Japanese Nikkei, both of those markets down, and that's tech read across from Friday. Yep. But is there also a question about whether trading partners who don't have trading deals in place might just kind of slow walk these things now to see where the land lies, and we end up in a period of prolonged uncertainty, I suppose, around trade?
But I think it was already uncertain anyway.
Trump I'm not sure there is a certain place
precisely,
on trade.
Trump shifts the goalposts on a daily basis on this whole story, as a result of which, did you have any certainty before? I'm not sure you did.
No.
Do you have any certainty now? You probably don't. I don't think it's changed very much. I think the expectation was that he was going to struggle legally with this, but would spin it out. And ultimately, he can go to Congress. That is the way of resolving this. Legislation is the way of resolving this. Will Congress go along with that? I don't know. But the Supreme Court thus far has largely sided with Trump. And he's got until October to file an appeal against this ruling.
Yeah, or to find a different way of doing it. Yeah.
And so the Supreme Court can then take its time. They stay in place, so nothing's going to change between now and the end of the year.
Let's talk about France, because here is another story that maybe has not changed over the weekend, but perhaps notable for that in itself. Yep. If you were looking for any signs that maybe these opposition parties were going to come round to support the Prime Minister for any reason whatsoever, you're not seeing it over the weekend. So the opposition parties are still talking tough, still not saying that they will support the Prime Minister. I was drawn to the Socialists' words. I mean, all of the opposition parties have said that we're agreeing to meet with Bayrou, but some of them are saying this is just a courtesy. There's nothing really to talk about. And the Socialists saying the only word I'm waiting to hear from Bayrou, Prime Minister, of course, is goodbye. And that just sort of highlights where we are in this conversation. But then there's also this interesting front being opened up here. If the French Prime Minister feeling under attack, then he's certainly opening up a new area of offence, and that is around Italy, and talking about the Italians enacting what he calls fiscal dumping, essentially objecting to fiscal tools being used as a tool of competition.
Problems at home, blame somebody else.
Yes.
Okay? Usually quite a good tactic. Blame the Italians.
For poaching all the high net worth individuals.
That's obviously the reason why we've got so many problems at home. Seems like a fairly well-worn tactic by any government if they've got problems at home. It is clear that he is going to lose this vote at this point. So we're still in this kind of phase of not really understanding what comes next.
Yeah. I mean, he still thinks he has a chance, but I don't know what he thinks he's going to say this week that will change to turn it around. But he does still think he has a chance. I mean, there's 8 basis points now, Guy, between Italy and France, and I wonder if that's going into his thinking as to why he lashes out at Milan and Rome. Maybe this hurts in Paris.
I'm sure it does. But it doesn't change the arithmetic that he now faces, and it doesn't change critically the arithmetic that Macron faces. So what is Macron going to do? And we're all talking about Bayrou this week, but this is Macron has to decide what he wants to do next. Does he want to appoint another prime minister? How does that change the calculus? Clearly, with the current parliament, you are going to struggle to deliver anything that is meaningful. Does he have parliamentary elections, snap parliamentary elections? That has a huge risk associated with it. Does he call presidential elections? That's obviously his resignation, and he's gone. So I struggle to see what...
He sort of ruled out any of those calling election-type activities, hasn't he? But, you know, these things have been a surprise in the past, so we'll wait and see.
I'm surprised that anybody's surprised that anything is... this is where we are. This doesn't look like it's changed very much over the weekends. Alex Yakov, BNP Paribas, Markets 360, is going to be joining us very shortly to talk about all of this. I'm quite curious to get his take on kind of what's happening in China, and we'll get his take on that, plus also the dollar. We need to talk more about that. Callum Picker is going to join us from Peel Hunt, chief economist there. Why is the UK struggling as well? And portfolio manager Julius Baer will join us to talk about the markets, and Bronwyn Maddox is going to join us as well to talk a little bit later on about what is happening with the geopolitical narrative of Pharma again as to what is happening out in China this week.
Let's tell you some of the data points we have on the agenda, other items to watch. Today, German Manufacturing PMI will be hitting the Bloomberg terminal. It's a US Labor Day holiday, of course, we know, so markets are closed stateside. Tomorrow we get the US Manufacturing PMI numbers, we get Euro area CPI, and that's really where the interest for Europe will lie, I suppose. We get retail sales on Thursday. We've got on Wednesday a China military parade, all of this coming on the back of the dialogue that we've been talking about between China and Russia and India and others. Thursday, we get retail sales, as I mentioned, and Friday, this is the big one, of course, payrolls. And we heard Jemana at the end of the last hour, Guy, making the point, of course, that it was the revisions to the July number, or that was where a lot of the shock has been, the fact that we thought we had jobs created, and then we realised that there were a couple of months that didn't create as many jobs as we'd anticipated.
And the next calculus on that comes a few days later. The whisper number is 75, the survey number is 75. I wonder whether those numbers change a little bit. And is 75 actually the right number to keep things reasonably steady at the moment? Anyway, payrolls Friday, one of the big events of the week. What else do you need to know as we start the week this Monday morning? Norway has picked the UK to supply warships for its navy in a £10 billion deal. It's the Nordic nation's biggest ever investment in its defence. Among the NATO members that border Russia, Norway had also considered France, Germany and the US for the contract. Delivery of the British Type 26 frigates, which are specifically designed to detect, track down and combat submarines, will start in 2030. Bloomberg has learnt that OpenAI is seeking to build a massive new data centre in India. The project could mark a major step forward in Asia for its Stargate branded AI infrastructure push. Sources say the company is currently scouting local partners to set up a facility with at least 1 gigawatt of capacity. The exact location and timeline of the project remain unclear. And Indonesian stocks have tumbled by the most in nearly 5 months, hit by growing concerns over political instability in Southeast Asia's biggest market. President Prabowo Subianto cancelled a trip to China following the unrest, and demonstrators targeted the homes of Indonesia's finance minister and several lawmakers. On Sunday, the president announced Parliament will remove hefty lawmaker perks that had been a source for ire for many protests, a source of ire for many protests. Protesters,
yes, indeed. And we see that playing out on the streets and in the markets. Coming up on this programme, then, the UK's Parliament returns from its summer recess. We discuss challenges facing the country's economy and more. Plus, Chinese EV maker BYD reports a 30% plunge in quarterly profit. More on the cutthroat battle for EV market share. We thought they were one of the winners, but we'll get into that story. Up next, we will be live from China's summit in Tianjin as President Xi Jinping hosts Russia's Vladimir Putin and the Indian leader Narendra Modi. More on that summit coming up. If you have questions, if you want to get involved in these conversations, IB plus BBTV Go. That is the function to use on the Bloomberg terminal. This is Bloomberg.
We should seek common ground while putting aside differences. Shared aspirations are the source of strength and advantage, and the will to seek commonality while shelving differences reflects wisdom and vision.
That was, of course, the Chinese President Xi Jinping speaking at the Shanghai Cooperation Organization Summit, which is taking place just outside Beijing in Tianjin. Let's bring in Mimin Lo, who's there for us now on this summit that is taking place. I mean, in theory, these leaders look unified. They look like they are standing together and are against Donald Trump, the US president. How unified a group really is this?
Yes, the relevance of the SCO grouping has been under question for many years because it started out in 2001 as a security grouping to rival the likes of the NATO. But you look at some of its member countries, India and Pakistan have conflicts with each other. Iran was attacked by the US, and the SCO during these instances didn't really, do a good job in showing its effectiveness in intervening in some of these conflicts. So, of course, today it is billed as one of the biggest, in fact, the biggest SCO gathering in its history, something that China is very proud of. It's all over Chinese state media. It's a platform for President Xi to show that he has this global leadership among these countries of the global south. And we'll be looking out for the joint statement, if any, that comes out of this, and what is the tone that the group adopts, especially in reference to the US, and whether there is any framing of the conflict, the territorial conflicts, the terrorist attacks on India and Pakistan. Are they given equal weight in the joint statements, and whether there is any mention of Iran and the conflict in Gaza as well?
Mimin, switching to markets, it looks as if there's a lot of focus on tech, and some of that tech's getting a negative read across from US stocks on Friday. Other tech, like Alibaba, lifting Chinese stocks today because of the progress that Alibaba is making in AI. Talk us through that.
Yes, Alibaba really surprised markets with its earnings report, right? Revenue surging, really supported by its cloud computing business, helping to offset the price competition and the hit to the profit in the food delivery front. And we saw this surge in its stock prices, helping to lift the other chip stocks in China, including SMIC, Hua Hong, and broadly we continue to see this blazing rally on Chinese onshore markets. Markets really shrugging off the weak or the contraction in the PMI data that we got over the weekend. The private PMI actually expanded, and it shows you that China is starting to learn to live with these tariffs. And of course, we have Modi and Xi meeting over the weekend, suggesting this normalization of ties, as President Modi announced that both sides will resume direct flights with each other. And some of these Indian companies with ties to China, they could set to benefit from the improved relations between China and India as well.
Mimin, thank you for the catch-up. Thank you very much indeed for the reporting. Mimin Loh joining us out of Tianjin. Let's carry on the conversation and connect this back to the markets that we're going to spend this week talking about. Alex Yekov is the head of G10FX strategy for Europe, BNP Paribas Markets 360. I just want to kind of connect what we've just been hearing about, what's happening out in Asia, what's happening in China right now, this gathering of India, China, Russia. These are the countries that have talked so much about de-dollarizing, finding an alternative to the global dollar system. You spend your life in this world. Do you see any progress? Is de-dollarization real in any shape or form?
Good morning. Thanks for having me on again. We've held a bearish view for the majority of this year on the dollar and still look for euro-dollar to trade to 120.
Yep.
A reduction in dollar exposure from European investors in particular has been a core part of that view. And that was the main story for H1. So higher hedge ratios from European investors in particular. We think the drivers of dollar weakness are now shifting increasingly more towards the Fed, with the Fed more in focus. It's not to say the hedge ratio story is over by any means. We think it will continue. But the Fed is increasingly important for the dollar, and that means the FX rates correlation, which had broken down in the first half of this year, can reestablish itself, meaning weeks like this, where we have payrolls, are really key for the dollar.
But is the euro... people are talking about migrating away from the dollar or focusing back on Europe. Is the euro an alternative to the dollar? Are there tectonic shifts happening within FX at the moment? Or is it just interest rate differentials still dominate, growth rates still dominate? Are these still the things that drive what we are seeing in terms of the FX landscape at the moment?
We think it's a bit of both. Yes, traditional relationships are coming back, but those tectonic shifts that you mentioned, Guy, are still there. And within the FX universe, yes, we think euro is the most attractive currency to rotate into. Importantly, we're not calling for an asset rotation. We're not calling for US asset selling, European asset buying from global investors. We're calling for higher hedge ratios from European investors. So a reduction in dollar exposure that way.
OK, so let's stick with the dollar. We'll come back to more on the euro in just a moment, because I see that Christine Lagarde is speaking. But let's stick with the dollar and that link between FX and rates that you say that correlation is sort of coming back. So what should be we be watching for? It's Monday, can't speak. What should we be watching for when it comes to Friday, when we get the payrolls data and we're looking at, maybe some more strength in payrolls than we thought, or maybe some weakness? And what is the reaction function in the dollar?
So I think the two, exactly like you say, Anna, are two separate questions. On the one hand, we look for a resilient payroll print of 90K with unemployment at 4.2, but the asymmetry for the dollar, we think, is to the downside. So let me break that down for you. For starters, the fundamental picture, as I just outlined, is already bearish dollars. But importantly, as labor supply has been coming off, so too has the break-even rate, so the level of job growth required to keep the unemployment rate stable, fallen. And that increases the chance of a soft or negative payroll print. Now, that negative or soft payroll print might not raise the unemployment rate, but it would optically be sufficient for the dollar to sell off. And that's kind of what the asymmetry for payrolls is all about in FX, even though our base case is for a resilient print.
And so does that mean that the euro gains as a result?
Yes.
Yeah, that's the euro. So, and I'm watching Christine Lagarde speaking this morning. She's speaking on other media at this point, and she's talking about. She's probably being asked about France, but trying her best not to mention France by name, I would imagine. But she's saying, I look very carefully at spreads. We need to see discipline in public finances. How much does any of that conversation around what's going on in bond markets, around widening spreads for France, around political unrest in France, how much does that cut through to the euro?
Not so much at this stage. When we look at 10-year OAT asset swaps, they're already trading above 100 basis points. So rates markets, as you say, already discount quite a lot. And parliamentary elections in France, to the extent that that's where we arrive, tend to have only a short-lived impact on the euro. Last year is a good example of that, where the euro sold off a little bit into parliamentary elections, but pretty much reversed that move straight away after the elections were over. Presidential elections would be more impactful than parliamentary elections, but that's not something the market is talking about at this stage.
By the yen into a BOJ rate hike, is that the trade right now? It seems to be warming up.
We think it's that simple. The BOJ will be hiking rates in October, and the Fed will be in easing mode, so you have strong monetary policy divergence again. And it doesn't seem like the market expects an imminent LDP election.
Nope.
Plus, we think positioning in the yen is lighter than in some other currencies when we look at our models. So the stars are really aligning for a bottom end of the tight range, a break of the bottom end of the tight range that dollar yen's been in August.
So it's domestic drivers then. It's that BOJ anticipation of hikes at the BOJ that you think that drives the yen? Because others say, look elsewhere. Look at the tensions between the Fed and the US government. Look at what's going on in France and other areas of political uncertainty that maybe drive into the yen. I suppose both could be true. Exactly.
I think both are true. I think the main driver is monetary policy divergence, and all the other factors that you mentioned just add to the bearish dollar yen story. OK, Alex, thank you very much. Thank you for joining us. Alex Yakov, head of G10 FX strategy for Europe at BNP Paribas Markets 360. It's going to be a busy week for Alex and anybody in FX, of course, with the payrolls data breaking on Friday. Before that, we get inflation data out of the Eurozone, just expecting that to come in at 2%. So as it was and as it is targeted, that'll be the conversation tomorrow, perhaps. Coming up on the programme, we'll focus in on the UK. Parliament returns from recess. We'll discuss the challenges facing Prime Minister Keir Starmer. Peel Hunt economist Callum Pickering joins us. The challenges for Keir Starmer, challenges for his Chancellor as well, in terms of that budget that is coming up and a lot of expectation around tax hikes. Is that overdone? Should we be expecting that to come to pass? We will talk about the UK next. This is Bloomberg. Welcome back. 30 minutes until the start of equity trading for Europe. Not for the United States, of course. It's a Labor Day holiday there, so we will be without probably some volume as a result. But the futures picture looks like this. Pretty flat for London. We'll talk about the UK and the broader macro context in just a moment. The CAC 40 futures suggesting a little bit of upside, continuing perhaps to rebound a little from what we saw last week. Of course, we have negativity around tech stocks in the US on Friday and into the Asia session as well, but maybe that doesn't cut through much here in Europe. We could
see weakness, as Guy was mentioning at the top of the programme, in London as a result of the weakness in the iron ore price. But then copper is higher, so mixed picture there. Let's talk about the bond markets. We're watching to see what happens, of course, again, because of the political uncertainty in France. Not because there's a huge amount of news flow, but just because that is where the market is paying attention right now in terms of European bonds. And we're at 3.53% on the French 10-year yield right now.
Is summer over? Kind of feels like it. Will be tomorrow. The Americans will be back. Labor Day holiday behind us. And today, here in the UK, Parliament returns from its summer recess. Prime Minister Keir Starmer is facing multiple domestic challenges after a summer which has seen asylum protests, tumbling government poll ratings and fresh surges in inflation. Joining us to wrap all this good news together is Bloomberg's Alex Morgan. Now what?
Yeah, well, Guy, where to start? Let's start with a poll, shall we? A poll of polls, looking across a composite poll that Bloomberg's put together, looking across the main pollsters, and this puts the Reform Party well out ahead on 28%. Labour trailing on 20%, the Conservatives on 18%. Now, that chart, if you like, is the backdrop to the start of this new parliamentary session. You can see there that now we're looking at their YouGov survey looking at Keir Starmer's favourability ratings. Now, Labour really are going to be wanting to sort of play the long game here. 4 years until a general election must be called. A lot of what Labour promised at the last election, making people feel better off, you know, they've had a lot of headwinds on that front, so you can imagine the governing Labour Party wanting to sort of push this long. Over the summer, though, Reform have been almost every single week out with another press conference. Nigel Farage, I think it's fair to say, has been setting the political weather on the issue of immigration and asylum across the summer. And that is a hot-button issue for politics in the UK, certainly for voters. We're looking ahead to the autumn as well. It's going to be a very interesting parliamentary session. We've got all the parliamentary party conferences coming up. We've got, starting off with Reform, with a record turnout from business leaders there. Then, of course, moving through to Labour, Liberal Democrats, and finally the Conservatives. Now, for the Conservatives, of course, who were in power for 14 years, I think it's fair to say their challenge for this parliamentary session is getting heard. Really. I mean, I've talked to you there about Reform on 28 in the poll, this poll of polls, Labour on 20%, Conservatives on 18. Kemi Badenoch, the leader of the Conservatives, really trying to make sure now that she can get heard. Nigel Farage has sort of parked his tanks on the Conservatives' lawn on some key topics, and all of this, of course, coming as well at the time we'll be having the autumn budget from Rachel Reeves. I know we're going to go into that in just a moment, talking about the economic pressures on the government at a time when Keir Starmer over the summer had defended Labour's stewardship of the economy, saying that he'd overseen a rise in wages and, of course, the Bank of England having done interest rate cuts. That, of course, is coming at a time when we have seen a rise in consumer prices. The Bank of England expecting inflation to peak at 4%, albeit coming down slightly after that. So what are the challenges? Guy, I think the challenges for the Labour Party are regaining a sort of front foot in the conversation on a whole number of issues. Immigration, of course, is a real big one, but then, of course, you'll be having the economic picture, forecasts, and then the budget as well. So it is a busy old time, party conferences, and Donald Trump appearing for his state visit, sort of nestled in the middle of all that.
Nestled.
Nestled.
That's how we're going to describe it. He's going to be nestled.
Nestled.
Sounds cosy. Alex, thanks very much. Bloomberg's Alex Morgan there with a rundown of some of the challenges facing the UK administration. Let's stick with that theme. Callum Pickering joins us, chief economist at Peel Hunt. So, Callum, no doubt there are challenges. We'll spend a lot of, 2 months talking about the run-up to the budget. So there we are. What a thing to look forward to. So we've got all of that ahead of us, and no doubt there is a big fiscal challenge. But if we step back, what is the story that you're telling around the UK? Because we've emphasised some of the negatives, but I know that the GDP prints earlier on this year actually came in a bit higher than had been anticipated by some. So what's the story you're telling?
Well, look, clearly there's a great deal of pessimism, and a lot of it is justified. Without question, the UK has made for a decade a succession of policy mistakes which have cost growth, productivity, profits and wages. No question. Then let's look at the data. Data for the first half of the year, real GDP growth, 2.2% annualised. That's pretty good. By G7 standards, that's pretty good. Only the US beats the UK in that respect. Recent PMIs, 53. Composite, that's not bad by any stretch. Inflation's a little bit high, no question. That's partly a policy mistake, but it also reflects decent domestic demand. People are willing to spend. And then across the private sector, actually, the situation's not bad. Banks are overcapitalised. Businesses have never had more cash in their balance sheets, and investment's growing. Corporate debt levels are low. You make the same argument for households. And what people forget is, just now, we're facing the tightest part of the monetary policy cycle. So from here, actually, monetary policy gets substantially easier because of the interest rate cuts that we've had. And so you look at the underlying data and you say, actually, this is an economy that's not doing great by UK standards, but it's actually not all that bad. And then you say, well, what happens next? And that's where you get panic.
Yeah, and that's where you get to the difficulty, I suppose, because even if the growth story has not been as bad as it could have been over the last 6 months or so, that's not good enough, I assume, to fix the fiscal headwinds that Rachel Reeves is facing.
Well, we need a sense of perspective when it comes to the fiscal headwinds. So a few things that I think are misunderstood. First is borrowing so far this year, completely in line with the OBR's forecast. You can look at that data online. We've not had any borrowing surprises. Second thing is borrowing costs. 10 years today, roughly where they were in March. The 30-year is higher by about 30 basis points. But when you bake all of that in, that's probably 5-6 billion extra. And then the question is, what does the OBR do with the forecast? The danger is that the OBR downgrades the longer end of the forecast. It's expecting about 1.7, 1.8%.
Because it has some punchy productivity expectations, right?
It does, but actually in the first half of the year, basically for the past 2 years, the UK has been growing around the long end of the forecast. So since November 23, UK annualised growth's been around 1.8%. That's roughly what the OBR is. So do you make that argument? And then for this year, don't forget the OBR forecasts 1% growth.
So the IMF's not required,
We're more likely to get to 1.3, 1.4. What's that, sorry?
The IMF's not required.
The IMF's certainly not required in the UK's case. The situation's... That's hyperbole, without question.
So why is the why is this happening? Okay. If the numbers you talk about are accurate, because I'm also looking at bond yields. Yep. The UK is in a completely different position to its nearest peer group in terms of the yields that it's being charged right now. Why doesn't the market see what you're saying?
Well, the market does see what I say. The UK's bond yield is consistent with long-term expectations for growth, inflation, plus some term premium. And then you have some structural factors. So let's take the UK 10-year rate. What are we trading at today? 4.7%?
4.7, yeah.
Bank of England's inflation target's 2%.
Yep.
Normal economic growth in the UK, let's call it 1.7, 1.8%. Maybe you want to add 50 basis points of term premium in there. OK, that's getting you to, what, 4, 5, something like that? Maybe you're 20 basis points higher, reflecting less liquidity at the long end, the fact that it's the smallest pool of debt among all reserve currencies. There's no natural buyer in the case that there is in Japan. And the UK's followed bad economic policies, which have produced too much inflation, but that's likely to be temporary. Fast forward a year from now, once inflation has probably got a 2 handle, and a lot of this at the long end of the curve will have come out. We don't have a lack of demand for our debt. We just don't like the price that we're paying for it. The price that we're paying for it is due to the policy mistakes, which are twofold. Too much inflation, too much hits to supply side. And then when it comes to the specific issue of fiscal policy, Labour's fundamental problem is that it's said half of spending we fail to touch, welfare, half we can't because it's protected, it's NHS and all the rest of it, and then 2/3 of the tax base, income tax, VAT and employee national insurance, we're not going to touch this. And so they've painted themselves into a corner.
How does Rachel Reeves get ourselves out of it, though? Get us out of it. Get us out of it.
They can't do anything without paying a significant political price at this point. What matters for fiscal policy is not real growth, but nominal growth, actually. And if you look at on that metric, the UK has got sufficient nominal growth to balance a budget. Let's say 2% real plus, let's say, 3.5. You could raise income taxes by a penny on the 21...
You're not allowed to, though, because they said they weren't.
Well, exactly. So that's the political cost. But the economics of that actually would be fairly straightforward. Right? UK households, for the most part, are not lacking funds. They're lacking the confidence to spend the funds that they have. Real wage growth has been a bit north of 3% for the past 2 years. Inflation adjusted. Savings rates, 10.5% in the recent quarter. We are an economy that's afraid.
So just to be clear, you think gilts are a massive buy right now?
I think gilts are probably 20 or 30 basis points too high across the curve. And I think...
In a year's time?
Yeah. As an economist, maybe you don't have...
No. But if you just added up the arithmetic on it, if inflation comes down...
Yes.
You take that component out of the arithmetic you just gave us, then gilts are coming down a long way.
If you have confidence that inflation is coming down, of course, the risk is that you have inflationary policy choices at the current budget. This idea of a moron premium is actually right. What I'm saying to you is, based on fundamentals, UK gilts look too high. If you look at the policy choices that government might make, then the premium might be justified.
Callum, it's great to see you.
It's always good to chat. Thank you so much.
Thanks. Fantastic. Callum Pickering. Chief Economist at Peel Hunt. Thank you very much indeed. Coming up, we'll continue tracking defence stocks after Germany's Chancellor says he sees the war in Ukraine dragging on with no clear end in sight. We'll talk about that and all the other stocks you need to be watching this quiet Monday morning. I'm joking, there's lots going on out there. This is Bloomberg. First of September, good morning. 15 minutes until the opening trade here in Europe. European futures broadly positive this morning, not up by much. You're going to see a light volume session with the US out for the day. It is the misnamed Labor Day holiday coming up a little bit later on in the United States. I guess it's already started. Let's turn to what we're seeing on the tariff narrative, because this is front and centre as well this morning. US trade partners have been left scratching their heads a little after President Trump's global tariffs were found to be illegal by the US Appeals Court Friday. For more on this story, we're joined by our trade czar, Brendan Murray, in London. Good morning. Did this change anything?
It changed the dynamics of the economic impact of these tariffs in a couple of different ways. If you're a company and you were paying these tariffs, you are now left with many more months of uncertainty, trying to figure out, should you restock your inventories? Yep. Should you wait and see, or should you should you rush to refill your inventories? And for the countries that President Trump has been negotiating with, suddenly you've got a few more cards in your hand that you can play against him if, in fact, the court does strike these tariffs down. He has plenty of other mechanisms to use tariffs.
Yep.
It's not going away. The tariffs will still be with us, but there will be different kinds of tariffs. They'll be more targeted than the blanket tariffs that he's imposed through this
because this is about the Liberation Day tariffs, isn't it?
Exactly.
Yeah.
Exactly.
Yes, about Liberation Day tariffs and about some others, it would seem, as well, but a bit unclear as to some of the details to which it would apply to. So, Brendan, do we assume then that if he can't do it this way, if the president can't do it this way, he'll find another way to generate tariff revenue, if at the end of the day that is the goal? Because market response is very muted today. I mean, I know it's a public holiday in the States, so you might expect that, and we don't have bond markets open, so we can't see what's happening there. But, it's possible that the long end of the bond curve could get very nervous about not getting that tariff revenue. But US futures are flat, and there's no sense of panic there.
We've heard the Trump administration say that they have a plan B for this. It's these other tariffs, the 232 tariffs. They've had the 301s in place on China for several years now. They can go very broad with those 232 tariffs, the pharmaceutical tariffs, the chips tariffs, the copper tariffs, the lumber tariffs, all these other sectoral tariffs that they can use, and they can use them very broadly. They can hit all sorts of things with tariffs on semiconductors. Everything every piece of consumer electronic has chips in them, and the same holds true with pharmaceuticals. So they can go pretty broad with these tariffs if these Liberation Day duties do get struck down. They can still generate plenty of revenue, maybe not as much as the $300 or $400 billion a year that they think they're going to get going forward from reciprocal tariffs, but they can definitely pay for some of the tax cuts, the spending that they've implemented with those other more legally tested.
Yeah. So other governments shouldn't assume they're going to get a refund anytime soon.
I wouldn't think that, and the Trump administration has said publicly, our trading partners know that if these other tariffs go away, that we still have some leverage through these other 232 tariffs to hit them with.
OK, Brendan, thank you very much. Bloomberg's trade czar, Brendan Murray. That's a great title. Let's talk about the markets. Joining us now, Bloomberg's Moena Coniam with the latest on where markets might head from here. And big picture, I suppose, we're kind of in limbo. US futures are pretty flat. European futures look kind of mixed. But Asia's been weak as a result of selling of tech stocks, apart from Alibaba. There's a lot of mixed signals going into today's European session, I suppose, Moena.
Yeah, well, we are definitely seeing a bit of a rout there coming over from Friday with the AI stocks leading in the US, and we're seeing that coming through in Asia this morning as well. I think one of the things I've been looking at is that I think that's going to be quite good for the FTSE 100 because we saw them actually have a pretty rough week actually last week, but they outperformed European stocks They dropped 1.4%. That was their worst week since April, but it wasn't nearly as bad as what we saw in Europe and in the US. And actually, with this sort of flight from risk that we're seeing spread around with the uncertainty, the UK's kind of consumer-heavy, defensive-heavy stocks are likely to benefit more, as well as there's a big rise in gold. And a lot of that uncertainty that we're seeing, particularly from the US Fed, what's happening with these tariff policies, helping precious metals, which again helps some of those FTSE 100 listed precious metal miners. So, after a difficult week this week, I think things have really aligned for it to perhaps do a little bit better this week and perhaps return to that ascent we'd seen to consecutive record highs earlier.
We're just waiting for payrolls. Is that what we're doing all week?
There is certainly that uncertainty and that overhang, and actually things are also quite stagnant, I think. I think when you're looking at the fixed income market in particular, we've seen yields, particularly long-dated yields, really rising across the board. And so, one of the things we've been talking about is France, elevated political uncertainty there. But we're also seeing it in the gilt market because there's a lot of uncertainty about what's coming up in autumn's budget, but that's quite a way away. So there's generally a sense that a lot of these catalysts are a little further out. And of course, as you say, with the US, we're waiting for payrolls. There's so much uncertainty about what's happening with the Federal Reserve and, also with tariff policies that I think everybody's kind of in wait-and-see mode. But at the same time, nothing's really alleviating that elevated risk profile.
Moana, we were just talking about how it's a long time to wait until the budget. It's a good 2 months, isn't it? Now, it might be roughly until we don't know the date exactly, I think. So we got 2 months of waiting to find out whether we get tax rises in the UK. It feels like the narrative can't just be that for 2 months.
No, absolutely. I think one of the things we'll be watching closely, though, is actually what the Bank of England does this month. The prospects of them cutting rates has been significantly reduced, actually. They sounded a bit more hawkish in their last meeting. Markets are now pricing in less than a 30% chance of a rate cut. But whatever is going to help that bond market heightened risk, could only really come from the Bank of England, because I think there's so much uncertainty with regards to what's in this budget. And actually, even though usually talks of tax cuts would be beneficial, perhaps, and reassure the bond market, I think when they seem so kind of wide-ranging, that's actually creating more anxiety just about the economic state that's faced by the government.
Moana, great stuff. Thank you very much indeed. Bloomberg's Moana Conningham joining us. Remember, you can follow all the thoughts of the whole team. MLIV Go is the function on your Bloomberg. Let's turn to the stocks that we're going to be watching at this Monday session. Defence stocks firmly in focus. Chloe Melly has the details.
Good morning, guys. So, let's keep an eye on the defence stocks today, and that is after German Chancellor Friedrich Merz said that he expects kind of no end in sight for the war in Ukraine at this point, and he expects it to drag on. So this could potentially lift the shares of some of those key defence names. Obviously, Rheinmetall, which has been having a fantastic last 12 months, with shares up more than 200%, but also Italy's Leonardo, France's Thales, and the UK's BAE Systems. An additional boost for BAE is that Norway picked the UK as a supplier of warships, and that is a £10 billion deal. So we could see an additional boost there for BAE, and that obviously deepens the cooperation between Norway and the UK. Moving on to AstraZeneca in the pharmaceutical space. So AstraZeneca said that its hypertension pill reduces blood pressure by more than twice as much as standard treatment. And this particular drug is particularly important because it could potentially deliver $5 billion a year in sales. And we have already seen AstraZeneca outperform its peers GSK and Roche. It's outperformed. It started outperforming around this summer. We can see it there. So this could potentially widen the gap a little bit further for Astra. Staying in the UK and moving on to Tesco, we've got a new price target, a raised price target from JP Morgan for Tesco. It placed it on positive catalyst watch. It said that the momentum looks really solid. The growth outlook looks good. So we could see an extension of that good performance that we've seen over the last year, with shares up almost 19%. And overall, analysts are quite positive about Tesco. We have got 11 buys, just 2 sells. So definitely a stock to watch.
Chloe, thank you. Our equities reporter, Chloe Melly, with the stocks that she is watching this morning. It's 7:53 here in London, so we've got a few minutes then until the start of the European equity trading session. And I guess other things we are watching, along with the things that we were just hearing about there from Chloe, the mining stocks, we put those in focus all morning, haven't we, with the weakness we're seeing in iron ore and steel prices coming through the Asia session. Interesting and a lot of that to do with stockpiles, apparently, and some of the data looking conflicted out of China. But then on the other side, copper is actually trading higher. So we'll watch to see how the miners deal with that.
Gold as well. Gold and silver stocks could be in focus as well this morning. Looks like we're going to have a fresh run at record. Silver's through 40. Gold looks like it's going to target that as well. The defence sector is in focus as well. The other kind of element that we just didn't talk about with the defence sector is VDL. Ursula von der Leyen's got some fairly precise plans, according to the FT, in terms of troop deployments into Ukraine. And that's being seen as a positive for European defence stocks. As the plans advance and it becomes clearer what could happen, you start to get an idea of how you would maybe price some of this stuff.
Yeah, some of the defence stocks retreated quite a bit, didn't they, on expectations that we were going to get closer to peace in Ukraine, and that has remained elusive, and we haven't got any sign of a meeting between Presidents Putin and Zelensky, and so we wait and backtrack some of those earlier moves.
Do you see tech stocks continuing to sell off? Some of that would have been captured Friday here in Europe. So names like ASML would have captured some of the weakness we saw back into the session Friday in the US. Does that continue, therefore, into Monday? You've certainly seen it in Asia, but I don't think the effect is going to be as dramatic maybe this Monday morning here in Europe. So that's how we are setting up for this Monday session. Remember, the United States is out. It is a Labor Day holiday over in the United States. We've got 5 minutes to the opening trade. It's likely to be, therefore, a quiet one from a volume point of view. There's going to be some stock stories, though, to focus on. Anyway, the open is next. This is Bloomberg. Monday, the 1st of September, good morning. European markets are about to open. They won't be opening with US markets. They're closed for the day. It's the Labor Day holiday over in the United States. Expect light volume as a result. Let's talk about Friday, though, because Friday was interesting and it is going to see some carry through, maybe a little bit into the Monday session. This was the sell-off first thing. The blue line here is the sell-off we saw in the United States. Tech leading that. Asia's responded to that this morning, but Europe had largely already priced some of that in. We saw it before the end of the session, so some of that is already in the price this morning. So think about, therefore, the effect being a little bit more muted into names like ASML. Keep an eye on the defence stocks. We're going to talk about those in just a moment. This is how it's all shaping out into futures. It's going to be interesting to see kind of that defence stock story maybe coming through. Not seeing much of it in the London market this morning. Miners are going to be in focus there. You're not seeing much of it in Euro Stoxx 50 futures either. Where you are seeing an interesting trade there this morning is in CAC futures, rising a little bit, but not by much. And again, this is going to be a week in which we're going to see political turmoil over in France, once again dominating the agenda. Does it move markets? Remains to be seen.
Yeah, absolutely. Plenty of political volatility, whether that's translated into market volatility. Let's have a look at where we are then on some of the sectors and stocks that we're watching this morning, Guy. As you mentioned, defence is on the list, but let's start with Pharma. We've had some interesting readouts from various drugs that are being tested right now. Novartis' Leqivo and Astra's hypertension pill yielding positive results. On the other hand, Bayer's Verigat failing to hit primary goals. So we'll keep all of those in focus. Defence stocks, as you mentioned, watching for Europe's plans with regards to Ukraine, watching BAE and other UK defence names on the back of that Norway news, and also Orsted, Equinor pledging to take up its rights in that rights issue from the wind turbine maker. Guy.
OK, here we go. Time for Monday's session. September session is underway. Here we go. Let's give you some numbers. Time for the opening trade. This is what the picture looks like this Monday morning. FTSE 100 out of the gate, flat as a pancake. Nothing to be seen here. We'll wait and see whether or not we get a little bit of traction. But so far, not much traction to be had. Keep an eye on what is happening in the pharma space, the defence space. Keep an eye on what is happening with some of these tech names as well this morning. Broadly, the mining sector could be of interest too, though maybe a little bit more divergent in terms of the miners in the gold sector, silver sector, and maybe in the iron ore sector, going different ways. The IBEX is up by 0.2%. The CAC, as expected, outperforming initially, but actually you can see the FTSE 100 climbing now, so actually not outperforming. So we're up by circa 0.3% on both of those two markets. We'll wait for the DAX to get going in just a moment, the SMI as well. In the meantime, Anna's going to break it down from a sector point of view.
Yeah, absolutely. And I'm pleased that one of our colleagues decided to focus in on pharma this morning, because that does seem to be one of the areas that we're seeing some strength. So healthcare stocks up by 0.5% this morning. And we talked about some of the positive results that we were seeing from various trials. So we see AstraZeneca, for example, up by 0.9%. So that's in the mix. We also see the grocery story. And I know Chloe was talking about Tesco, and we see that stock up by 2.7%. So there's some positivity around the grocery businesses, boosted at the price target for Tesco, boosted at JP Morgan. So that's something we are watching with regards to that sector. The banking sector not doing too badly. Technology pretty muted, and you were right, Guy, to suggest that this was largely in the price from Friday, because some of those big tech names in Europe were down by more than 2%. So it's interesting in itself that we're not seeing a bounce back from any of that selling. We're sort of living with those levels, but we're pretty flat now on technology, feeling that we may have priced in the negativity around Nvidia that we saw on Friday, during Friday's session over in the United States. Now, Basic Resources, another one that we discussed earlier on in the programme. Yep. Guy, we see Rio Tinto down around 1%, Anglo-American also weaker. Not everything is down, and some of the copper mining businesses are doing well, but that iron ore price weighing on some in the sector.
So Rio, in theory, when you think about Rio, you think about a copper producer, but it is down. In fact, it's the biggest points drag when it comes to the mining sector this morning. It's down 1%. So the story when it comes to what is going on with the iron ore, clearly a drag there. It's interesting, some of the luxury names are also fairly soft this morning. I wonder whether that's a read across again into what we're seeing in terms of the Chinese PMI data. So LVMH is down by 0.3%, Richemont is down by 0.2%. Now, those aren't big percentage moves, but in terms of the points drag, they're fairly high into the stock 600 this morning. So that's where you're certainly seeing some losses coming through. So it's interesting. Tech is actually, in terms of points, still quite a drag. ASML is still the biggest points drag this morning, down by circa 1%.
And you mentioned precious metals earlier. We see some positivity coming through there. We're up by actually 2% on the silver price overnight, and that is having an impact on some of the miners. So we've got these two different stories, or at least three different stories. Yeah. Fresnillo, which operates silver and gold mines, that's one business that's going higher. That's up by 2.7% today.
I wonder if that's... I don't know. Maybe I'm stretching here. I wonder whether that's having an effect on LVMH this morning and Richemont in terms of maybe the hard jewellery side of the business, hard luxury side of the business, whether there's an effect there as these prices go higher, whether or not that's something they can pass through to their customers. I don't know. I'm stretching a little bit. But defence names certainly are well bid. BAE Systems, Rolls, Rheinmetall, all trading strongly this
week. And most sectors in positive territory, even if we haven't got much volume, probably because it is a US public holiday. Let us bring into the conversation Ando, portfolio manager at Julius Baer. Very nice to have you with us. Thank you for coming in. Let's start with the big picture then around these markets at this point. We're moving into September, which is usually, historically, a pretty tough month for stocks. Are you expecting it to be a tough month for stocks? We might get a rate cut in the mix.
Yeah, good morning, Anna. Good morning, Guy. And good morning, everyone. September tends to be, a volatile month for the market, seasonally speaking. That said, you take a step back. The backdrop for stocks have been very good. So in terms of the macroeconomy, we've avoided the worst-case scenarios in terms of the fallout from the tariffs. In terms of the policy environment, we are seeing more rate cuts coming out of the US, that Federal Reserve pivot. So that backdrop for the stock market is very positive. We just came on the back of the earnings season. That's also been quite positive for the largest weight in the stock market in the US as well.
Do you expect volatility then in these markets? Because actually VIX has not been above, I think it's above, rarely spotted above 20 over the past 3 months. We seem to not be assuming that we're going to see much volatility in these markets. Is that a safe assumption going into September, do you think?
Yeah, there is a sense of complacency, I guess, in terms of that volatility figure that you just mentioned. In terms of positioning, we're still quite risk-on. So we are overweight equities. We added in June and July on the back of that changing backdrop that we're seeing, just the economy improving, the soft data improving, as well as the earnings season signaling still quite strong momentum so far.
Payrolls are coming up on Friday. If you get how important is a rate cut at this point for equity markets to keep moving to the upside? Because I'm struggling to see where the next catalyst obviously comes from, and maybe rate cuts are it. If you get a big payroll number, say you get 150k coming through on the payroll number, where's the number that takes September to zero in terms of expectations? Where's the number? If you get north of 100, do I take it down from being 25 to maybe 15 basis points being priced? How strong does that number need to be to disabuse us of the idea that the Fed should be cutting interest rates? And if so, how big a reaction do you get in equities if that were to be taken away? All of this is hypothetical, but it's a Monday morning and Friday feels like a long way away.
The idea of the rate cut is very well entrenched at this point. I think it will take a lot for the market to give up on hopes of rate cuts. This year we expect 3 more rate cuts. I think that's pretty close to consensus. So if we do get that pricing out of the dovish Fed, I think the market would not take it very well. But at the same time, I think it would take a lot. And if you think of the Federal Reserve and the committee, they are very sensitive to any changes in the labor market. It's not just the unemployment rate, it's the hiring intentions. They're looking at the broad set of indices.
Do you like US markets at these kinds of multiples? I was pretty shocked the first thing this morning. It's Labor Day in the States, but the Journal, the first thing I read online this morning, US markets hit .com era multiples. Are these kinds of headlines okay? Can we live with these kinds of headlines? Are we okay with these kinds of multiples? I know it's very concentrated, and I know earnings are holding up at the moment, but are we okay with these multiples?
There's definitely a sense of this wall of worry, the valuation debate coming back for the market in the US especially. I guess if you look at the top heaviness of the index and where the multiples are for those big stocks and the rest of the indices, you have extreme valuations more so in the rest of the indices, so in the S&P 493 if you like. So you have to be more careful in terms of your selection here, because in the top 7 stocks, in the largest stocks, the growth is still there, the quality, the story, the long-term secular story is still there. So you want to pick and choose and where you want to take more of a valuation risk and for longer-term growth.
We ask how important rate cuts are to stocks. We could also ask how important are rate cuts to precious metals and the gains they've been making of late, because we were used to talking about them in a geopolitical context and depending on the metal and industrial context. But now there seems to be a lot of people tying this to the Fed and talking about the gold and silver going higher as a result of our expectations of rate cuts. You're overweight gold, I think. Is that a trade you're happy to stick with?
We're still overweight gold. Gold has defied expectations because it's only recently that we're hearing more about these rate cuts. Rates have been quite high year to date, but yet gold has still worked on the back of the backdrop of uncertainty, the backdrop of tariffs. So I think there are multiple elements that could still play in favor for gold. That story around de-dollarization, that story of diversification away from U.S. assets and U.S.-denominated assets into real assets like gold and precious metals. I think that story still has legs, and therefore we still overweight the precious metals.
So that's the precious metals narrative. I mean, everything we've talked about seems quite calm. Is that right? Should we be going into the rest of the year thinking about a calm market backdrop? I think news can come at us fast. We know this.
Volatility has been low, but if you look at the market narrative, you've had periods of scare here and there. The labor report was a source of fear for the market. NVIDIA earnings last week was a source of fear for the market. So you have periods of scare, although it's a wall of worry. And I think the strong backdrop around the economy, the strong backdrop of the policy pivot, I think could be interesting for markets still.
Do I look elsewhere? Chinese markets are absolutely on a tear at the moment. The AI story is beginning to gain traction. Vows had just had an amazing session. Do I look elsewhere?
Outside of the US?
Yeah. Where are you looking right now? Where am I going to get my alpha? Is the outperformance going to come in the States, or is it going to come from different markets?
I think we've been diversifying portfolios away from that US stronghold of secular themes that we like. We've added to China early this year on the back of that pivot in fiscal policy, more of a stimulative stance from the government, more friendliness to the private sector. So that's earlier this year. More recently, we've also added to India, that secular story of growing demographic, a very strong domestic economy, less reliance on external factors, which means they're more insulated from tariffs, relatively speaking. So outside of the US, there are opportunities.
Are you adding, are you adding more to those positions? Do you still like those trends? I guess China... Do you want to play in this recent bout of enthusiasm, particularly from domestic investors in China?
At the point of adding to China, it was still at quite low valuations. So we think it's a trading market. We think of the Chinese market now similar to Japan in the late 1980s, trading in a range. So every bounce and rallies, we need to understand the momentum and the underlying drivers.
Thanks very much. Ando, Portfolio Manager at Julius Baer. Thank you for joining us as we work our way, Guy, towards payrolls. That's going to be the big event of the week, of course. But in the meantime, it's a quiet day in terms of the volumes, no doubt, because we don't have the United States. how's the core six doing?
There's things to talk about. I'm not going to completely dismiss today. I appreciate that there are markets that are closed elsewhere around the world, but there's some interesting things happening. Core 6 looks like this. Rheinmetall is one of the names that stands out. ASML, there is still some weakness there, and that is, just from a points point of view, adding a little bit to the downside around Europe this morning. But as Anna says, it is a fairly quiet session. Pharma's looking good. Defence is looking good. Tech is looking less good. Let's dig into the details of all of that with Chloe Mellet.
Good morning, guys. So, yeah, as you said, quite positive movements in defence today. That's on the back of German Chancellor Friedrich Merz saying that he sees at the moment no end in sight to the war in Ukraine, but then also von der Leyen laying out precise plans, according to the EFT, for potential military deployments in Ukraine. All of that is feeding into quite positive story for that space this morning. BAE is also up the most out of all of those four, and that is also because it's benefiting from that, from Norway picking the UK as a supplier of warships, and that is a £10 billion deal. So it's also benefiting from that as well. Moving on to the mining sector, and there it is down a little bit. We are seeing a little bit of weakness for Rio Tinto and Anglo American. Fresnillo is doing a bit better. This is on the back of iron ore falling. The inventories of steel are accumulating in China. Some of the economic data out of China is not doing too well, and that is dragging down the shares of those miners this morning. Moving on to Tesco. Tesco is up. It is up almost 2%, and that is on the back of JP Morgan raising its price target for Tesco on the back of a good growth outlook. So that is quite a positive morning for the retailer this morning. And finally, let's end on TeamViewer. TeamViewer is a software company out in Germany, and it got raised to a buy rating by Bank of America, and that is really driving the shares this morning. We're up almost 8% for TeamViewer.
Chloe, thank you. Chloe Mellet from our equities team with a look at some of those stocks on the move. We are going to talk about some of these sectors in focus next. Certainly the pharma sector in focus for us today. We're also going to be thinking about the wind generation sector with a rights issue at Orsted. All of that in conversation next. This is Bloomberg. Welcome back to the opening trade. 16 minutes into Monday's session, the 1st of September, the first trading day of a new month. And we have European equity markets actually on the front foot, so trying to brush off some of that negativity around the technology sector on Friday. There is still some of that in there, but finding other reasons to go higher this morning. And so across the board, we seem to be up by around 0.3%, certainly on the major markets this morning. Let's focus in on the wind generation, electricity generation sector. Norwegian energy company Equinor says it intends to subscribe for new shares in the wind developer Orsted, the first major investor after the Danish government to back the sale. Joining us now is Bloomberg's Sanna Vass with details of this. And I suppose Equinor's participation here is important because it is, I think, the second largest shareholder in Orsted. Sanna, so to tell us the significance of this news.
Yes, this is very good news for us today. As you say, Equinor is the second largest shareholder after the Danish state, which has already been out saying that it wanted to support the rights issues. But of course, there's been a lot of uncertainty as to what extent other shareholders would want to participate, given all the headwinds that Orsted is facing. So a big vote of confidence. Equinor holds 10%. Of Orsted, and they will continue after as well. Very good news for Orsted.
Sanna, the team, the investor relations team, the management team, has been speaking to investors in London the other day, trying to reassure everybody that actually the situation has stabilised. Do we have any read on how effective that effort has been? What are investors asking, and do we know whether or not they've been satisfied with the answers they're getting?
I think, I guess Equinor's move today indicates that Orsted have had some success in convincing investors that this is a rights issue that they should be supporting. Of course, we still don't know how the rest of the shareholders feel about this, but they may gain a bit more confidence also from now seeing Equinor's move today. Now, on Friday, Orsted would hold an extraordinary general meeting, and there the shareholders will vote as to whether Orsted can go ahead with the rights issuance, and then we'll know more details, and we'll find out really how shareholders, the rest of the shareholders, feel about this.
And I mean, thinking about the bigger picture headwinds, if that's the right phrase to use, when it comes to this sector, Sana, I mean, President Trump does not like wind farms. We know this. And that's really the big problem for the sector and the big problem for Orsted. But there's still been quite a lot of volatility based on whether the latest reading is slightly more or less negative than had previously been expected. So what is the base case sort of situation over in the US?
I think certainly there's still a lot of uncertainties for Orsted and a lot of headwinds in the US, in the UK, and whether or not they will manage those headwinds is still probably too early to say. But I'd say from the news this morning, Equinor, certainly big Norwegian energy company, they have shown, or they have communicated that they believe in the green transition. They believe in Orsted, and that Orsted will be able to come out on top, and so that's certainly a big move today.
Sana, thanks very much indeed for the reporting. Sana Vows, we'll look forward to that meeting coming up towards the back end of the week, get a better read on what is happening with the investor relations story. Sana Vows, on what is happening with Orsted and Equinor. I'm still stunned that Orsted announced the rights issue and then left this enormous period of time between announcing it and executing upon it. And they've just left themselves wide open for the kind of volatility that Trump can create and the problems that he can generate. And you've seen that writ large.
Yeah.
Why that decision seems so mistimed now? Announce it, get it done quickly, seems to have been the message here.
Right, and in the meantime, as you point out, President Trump has been active, has been cancelling wind farms, or his team has been cancelling wind farms in various locations, as we talked about over the last couple of months. It is still interesting, though, how very negative expectations around this sector at the time of the election and inauguration. Everybody knew how President Trump was very anti the sector, and yet we still managed to create quite a lot of volatility in the share prices within it, based on some of the latest reporting. Whether some of these fields get a stay of execution turns out to be a positive.
And you've just left yourself so vulnerable to that with the kind of timing. So just does seem as if it's been a very strange decision. Let's talk about one area that we are certainly more positive on this morning. AstraZeneca shares rising after the drug maker said its experimental hypertension drug, its next generation one, is reducing blood pressure in patients by more than twice as much as standard treatments. This is a large, late-stage study that has been conducted here. Bloomberg healthcare reporter Sonia Vint joining us now. Can you just tell us a little bit more about this? This seems like a very big step forward in the treatment of hypertension, i.e. high blood pressure. When can we be potentially seeing this drug coming through, and what could it mean in terms of the scale of sales that we're talking about?
Yes. So AstraZeneca really just cleared a pivotal trial for this drug. It aims to file by the end of the year. So that means that the drug could launch in the market in 2026 if all goes well. And what the drug does is that it blocks certain hormones that allows it to lower the blood pressure in patients. And what's really significant here is that it also works in patients who are usually resistant to drugs. So 1 in 10 patients are drug resistant for hypertension. So this drug works there, which is a huge win for AstraZeneca. And it also helps it to expand beyond its oncology pipeline and push into the market for cardiovascular drugs and bulk up its portfolio there.
Yeah, blood pressure medication, clearly a really big market, of course, Sonia, but also a very competitive market, a crowded field, perhaps. Roche in this space, other US pharma companies also developing blood pressure shots. Is there room for all of them?
Well, so you mentioned the one from Roche, and that one would be a twice-a-year shot. So that would be a huge advantage because the main important thing for drugs is that patients actually take them in order for them to work. And many patients struggle with taking pills on a daily basis. So the shot from Roche could be a really interesting medicine, but the trial is really huge. So it's more than 10,000 people, and it will go until 2030. So it's really early days for that medicine there, and we need to wait for that data to come out. So AstraZeneca could move way earlier, it could launch the market 2026, as I mentioned before. So that would be an advantage. And when we look at the similar medicine from Minerales, which works similarly to the one from AstraZeneca, there they have a similar risk-benefit profile. So that's something that analysts mention. And so they think that investors really want to wait until next year when the drug is launched on the market to see if the expectations really live up to the performance on the market.
How does this fit into the wider cardiovascular story that Astra is generating at the moment? Is this something that is going to work in conjunction with other therapies? This is an area that the company clearly has been focusing on.
Yes, exactly. Yeah, so AstraZeneca, it has a really good footprint in the oncology space. So this drug is a key part of its efforts to bulk up its portfolio of drugs in the cardiovascular space. And hypertension is a really common issue, and it's a risk factor, like the leading risk factor for death from heart disease. So there's really a big market potential here, and to treat also a wide group of patients.
Sonia, thank you very much. Thanks for joining us. Sonia Vind with the latest on the pharma sector. And actually, the pharma sector is doing really well today, Guy. It's the best performing sector on the stock 600. But at the other end of the spectrum, we've got weakness coming through in the mining stocks. But it's a host of different reasons really driving that mining story. So on the one hand, you've got iron ore prices, which are weaker. So iron ore is down by 2%. Mixed signals coming out of China, perhaps. We had the official PMI and the private sector PMI telling us different things about where we are versus expectations there in China. So that's part of the narrative. But then on the more positive side of things, we've got the likes of Fresnillo trading really strongly. That's more precious metals related. And we've got gold prices, silver prices, in particular, silver prices, in fact, going higher, because the more we expect the Fed to cut rates, the lower is the opportunity cost of holding other things, such as precious metals. Yeah,
we'll wait for the data Friday to see whether or not the Fed does cut rates. Obviously, the expectation is that it will be in September. I want to go back to the top end of the FTSE 100, actually. Astra's doing very well, but BAE Systems is also doing very well. The reason for it is there's a multiple number of reasons. One of which is the fact that we've got this big Norwegian defence order coming through for ships. They're going to be buying frigates out of the UK. You've also had Ursula von der Leyen talking about fairly concrete plans about troop deployments in Ukraine. That seems to be helping the situation out as well. So names like Rolls-Royce are doing very well today. BAE Systems is doing well elsewhere on the continent. You've got names like Rheinmetall also trading strongly as well. So the defence story front and centre this morning, along with some of these pharma names that are doing well as well.
Coming up on the programme, we'll talk global geopolitics. We'll be joined by Bronwyn Maddox, Chief Executive of Chatham House. China's Xi and India's Modi rebuild ties. We've seen Modi also meeting with President Putin of Russia. We'll put all of that in focus. Is it as simple a story as this new alliance builds in the face of threats from President Trump's administration, or is there more complexity behind the scenes? We'll talk about that next. This is Bloomberg. This is the opening trade. It's September, everybody. 30 minutes into today's session, 30 minutes into trading in September. And so far, so good. I've read a lot of stories about how negative September can be for stocks. Historically, it has been so. But today, so far, only half an hour in, it's not negative at all. We're up by 0.5% on the DAX, on the CAC 40. The Stocks Europe 600 up by 0.4%. We are without the United States, of course. They are on their Labour Day holiday, so volumes, no doubt, are a little lighter than usual. And we've got some big data points, Sky, coming up at the end of the week. No doubt payrolls will be front and centre. And if we take the first half of September, we also include in that time frame a rate decision by the Federal Reserve, which will no doubt be pivotal. So there's a lot at stake during September.
Weirdly, actually, volume isn't as bad as I thought it would be. In as much as volume's been pretty terrible over the last few weeks. That continues today. We're down by, let's call it a third in terms of where we should be versus the 100-day average. But actually, I've seen worse numbers than this over the last few days. So maybe the 1st of September, the Labour Day holiday, not having that big an effect. In terms of the internals, the market's definitely higher, 444 up, 133 down. So that's definitely front foot territory when it comes to equity markets. In terms of the 52-week highs, if you want to play the gold and silver story, well, there's a number of ways you can do it. One of which is you can buy lumps of the stuff. Obviously, a lot of people have been doing that, but you can also buy some of the assets that surround it, and one of the miners that digs the stuff out of the ground is Fresnillo, and it has been on quite the tear of late. As you can see, this is a stock on a one-year basis that is up by 235%. Today, it has hit a fresh 52-week high, and there's talk of fresh highs in silver. Silver's through 40. We've also got gold potentially getting kind of pulled along with that trade and potentially hitting fresh record highs as well. And one of the ways of playing it thus far has been with Fresnillo. And as I say, Anna, that stock at a 52-week high today.
Yeah, certainly a multi-dimensional trade around basic resources this morning, isn't it? Let's take stock of some of the other news headlines that you need to know about this morning. US trade partners have been left perhaps confused after President Trump's global tariffs were found to be illegal by a US appeals court on Friday. The 7-4 decision by a panel of judges in Washington was a major setback for President Trump, but the ruling leaves the levies intact for now while the case proceeds. The French Prime Minister François Bayrou is striking a combative tone in his effort to gain support for next Monday's confidence vote. He told French TV that, quote, compromise is a beautiful thing, but I'm not sure it's possible. The remarks follow comments by several opposition leaders over the weekend that appeared to sweep aside any chance of their support. Chinese President Xi Jinping says the Shanghai Cooperation Organization is taking on greater responsibility in driving shared development as global uncertainty continues to rise. Xi made the remarks as he welcomed international leaders, including India's Narendra Modi and Russia's Vladimir Putin, to the summit in Tianjin. And it is this summit, Guy, that is on our minds as we take stock of the geopolitical shifting tectonic plates this morning.
Absolutely. Let's continue with our coverage of the summit that is taking place in Tianjin. President Xi talking about seeking, quote, commonality as he looks to build bridges with neighbours across countries in Asia.
We should seek common ground while putting aside differences. Shared aspirations are the source of strength and advantage, and the will to seek commonality while shelving differences reflects wisdom and vision.
Min Lo in Tianjin for us to cover this event. We've obviously seen some fairly significant meetings taking place over the last few hours as the day has progressed in China. What else is on the schedule? What else are we looking for to come out of this event?
Yeah, first of all, we had President Xi speaking this morning, talking about opposing this Cold War mentality. He didn't name drop the U.S., but it was clearly a veiled swipe at the U.S. But what we're watching most closely today is the Modi-Putin meeting. It just ended. We don't have the readout yet, but we have the opening statements from Modi. He said that Russia and India had a very special, privileged relationship that has withstood the test of difficult times. And so far, it seems, India remains very defiant in the face of those additional 25% tariffs that U.S. has imposed on India in punishment for its purchases of Russian oil. India's largest state-owned oil company saying today that it will continue to buy every drop of Russian oil available as long as it remains economical. India's oil minister as well hitting back against Peter Navarro's criticism that India is this laundromat for the Kremlin, saying that its buying of Russian oil so far has been within international rules. It's in line with, or it's at least below that price cap that has been imposed by the G7 to limit Russian oil revenue. And so it looks like we have to thank President Trump for providing this diplomatic opening for India to continue to tilt towards other partners in the region, Xi and Putin. And one of the more iconic images that have come out of this summit so far is that image of Putin, Xi and Modi laughing together, Modi and Putin as well embracing each other. They took the same car to the venue of the bilateral meeting, really giving them a bit of private time to speak together with each other without a lot of aides around.
Yes, I mean, President Trump's presence at the meeting, even though he is not physically there, clearly an interesting one to think about, Min. Now, over the weekend, we also saw that meeting, a bilateral meeting between President Xi and the Indian Prime Minister Narendra Modi. These two nations have been far apart for some years diplomatically, but again, we're seeing a coming together, perhaps.
Yes, President Modi announcing that the two sides will be resuming direct flights with each other at some point. But again, bear in mind, this is something the two sides had pledged since the start of this year, since January. But progress has been slow. But there are signs of this normalization of relations, and the tone suddenly has improved very markedly from 2020 when the two sides were engaging in deadly border clashes along the Himalayan border. And the tone, the rhetoric from the Chinese Foreign Ministry, one of the most common metaphors they're using now is to describe the relation as this dragon and the elephant tangoing together. So a very positive tone here. China certainly has been the one to court India amid this backdrop of their mutual mission to counter the tariff impact. But Modi is walking a very fine balancing act because he is one of the few leaders present at the SCO meeting that will be notably absent from the military parade happening a couple of days from now. So he will not be standing on the days above the portrait of Mao Zedong alongside President Putin, Kim Jong-un and President Xi. Think about that optics. It's not going to look good for Modi, given India prides itself as one of the world's largest democracy, for him to be standing alongside some of these autocratic leaders. So he's hedging his risk against that souring relations with the US, but not exactly diving into the embrace of China as well.
Min Min, thank you very much. Min Min Lo joining us there from Tianjin. Let's stick with this theme of global geopolitics and bring in Bronwyn Maddox, Director and Chief Executive at Chatham House. Bronwyn, nice to have you and your perspective on the programme today. So we're watching closely the developments of this Shanghai Cooperation Summit, and clearly all of the attention on big superpowers coming closer together as they all face a shifting policy environment, to put it politely, from the United States, and challenges and threats perhaps from the United States. Is that too simplistic an interpretation, or are we really seeing, yes, these powers being pushed together by a rivalry with the US?
It's not too simplistic. It may be too polite. I think it is one of the most self-destructive things that the US has done under the Trump administration, of putting these tariffs on India while having as a policy combating China's rise and military rise in its own region. Because what it has done very abruptly, and we've just heard a description of how the relationship between China and India has suddenly warmed up. That is in response, I think, to the chill that India is feeling from Washington. And so India, which has always tried to stay non-aligned, that has been its policy, but is looking for other friends and alliances, and has made a point of going to China, of having these top-level conversations. A few wrinkles in that. India's Modi has said he's not going to go on the Victory Day parade, so there's some things still keeping his distance, and there are a lot of things that India and China still do not agree about. But what the Trump administration with its tariffs has done is create a lot more warmth between India and China that were rivals until very recently.
Yeah, I mean, what are the limits to how warm that relationship can become, though, Bronwyn? Because as you point out, they don't see eye to eye on everything.
They really don't, including on the borders, where they've managed to talk themselves down from the friction that was there a few years ago over border clashes, but it still is a kind of running sore. You also have the commercial unease, India really trying very actively until all these tariffs came in to persuade companies to move out of China because of the risk there, move into India. Apple was one of the big ones, but obviously its card isn't as strong as it was if suddenly it's going to be hit with tariffs as well. But it has been a rival of China in that respect. And then India is alert to and not comfortable with China's increasing military power in the region and in the seas around there. So there are lots of points of potential tension. I don't think they're going to become warm friends, but they may become quite calculating allies.
OK, calculating allies. How does that actually translate into policy and action, Bronwyn? Because this feels a lot to me like optics. There's some nice pictures being taken. Clearly some handshakes are being made. It all looks great. But in reality, as you say, it's much more difficult to translate this into something concrete. So what actually, does anything come out of what we are watching in Tianjin at the moment?
Well, I think it does. And the practical thing, the first practical thing is India continuing to buy Russian oil in great quantities, and so siding itself pretty firmly, not just with China, but with Russia over that. And then we'll have to see what happens on weapons and other trade deals. You're absolutely right about the optics, but optics are not nothing. China has been reaching, whether through the BRICS or now the Shanghai Cooperation Organization, to find congenial clubs of countries which, even if it doesn't say its manifesto is anti-NATO or anti-the West, that is what it is reaching for. So I think we have to see, but it's not nothing.
What's the object? OK, so they're reaching for this greater group. They want to have warmer relationships with some of these countries. What is the objective of that? What does China want out of this in terms of furthering its cause?
That is a very, very good question. And I think it is hard to define beyond saying more influence, more ability to tilt the world its way. It has railed for a long time against the rules-based international order, very much crafted by the US, particularly after the Second World War. And it has been delighted in a way to see the US stepping back from that, and has been making rhetorical hay with that, saying, well, look, we'll have a different rules-based order. But it hasn't yet been as emphatic as it might in actually trying to shape that its way. It seems to be doing it through alliances rather than trying to hammer out new rules. So I think we have to see what comes. But it has found good use of those alliances in the past to extend its own trade, its own military influence.
OK, so we'll watch how China tries to increase and extend that influence. In the meantime, how should Europe respond? I'm thinking here about the European Union and what it's witnessing and how it thinks about its own interests, but also the UK and the wider European family.
I think Europe needs to keep up its ties with India. This is a complex world we're in, and the fact that one country has moved away from the US doesn't mean it has to move away from Europe at this point. Europe needs those trading ties, particularly the UK, which has just done a trade deal with India. So I think that will continue. You do have the thorny question of Russian oil in there, but of course Europe still takes some Russian gas. But that does have an impact on the Ukraine war. But I think Europe can also send a message to Washington of be careful with this relationship, because it is really can destabilize a lot of things if India more decisively moves in the Chinese direction.
Bronwyn, always great to catch up and get your insight. Thank you very much indeed for bringing it to us. Bronwyn Maddox, Director and Chief Executive of Chatham House. Thank you very much indeed. Coming up, we're going to stay with the political theme. The French Prime Minister admits he may fail to reach a compromise ahead of a confidence vote later this week. The latest on efforts to save his government from being ousted. That's next. This is Bloomberg.
Welcome back to the opening trade, 8:47 in London, and it is the 1st of September, and we have green on the screen. So far, so good for what is typically a volatile and negative month for stocks. So we've got European stocks on the front foot, up by around 0.4%. Will it last? We've seen pressure on French stocks as a result of political turmoil in recent days. So let's go to that story next. The French Prime Minister, François Bayrou, has told reporters he wasn't sure that a compromise would be possible in talks with opposition parties this week. Those remarks coming a week before legislators hold a confidence vote in the government that he is currently running, of course. For more, let's bring in Bloomberg's Paris Bureau Chief, Alan Katz. And still the Prime Minister, Alan, good morning to you. Still the Prime Minister says he can see a way through this. He can see a way that he can get support. Most other commentators and investors tell us they can't see a way that the Prime Minister can survive. What are you hearing in Paris?
Well, I think Bayrou is certainly being more optimistic than just about anybody else who is looking at this. Now, that said, it's politics, so you never say never. Things have been known to change, and as he points out, a week is a long time in politics. So I suppose the answer is you never know, but it really does look quite likely that he will be forced to resign a week from today when he holds this confidence vote. The other parties, particularly both the Socialist Party and the far-right National Rally Party, over the weekend said they absolutely would not support him, that they would vote against his confidence motion. And without either one of those parties changing around and at least be willing to abstain, it seems that he would have very little chance of surviving that motion.
So who's next? What's next?
Well, that's the million-dollar question. I mean, sort of formally that's easy to answer, but in terms of actually figuring out who the people are or how it would be structured, that's much harder. So the way it works is that if he loses the confidence motion, then Bayrou will be forced to offer his resignation to President Emmanuel Macron. Macron can then either name a new prime minister, and that person could even include François Bayrou, though that seems unlikely, but he can name any person he wants as prime minister. but again, that person sort of in the longer term, over the course of the next several months, would need to be able to sort of couple together enough support to be able to pass the one really must-pass bill in France, which is the budget. And that's really not obvious who that person would be. The other alternative, or there's actually a couple of other alternatives that Macron has. He could dissolve Parliament like he did in June 2024 and call new elections. Now, that went pretty badly for his party and its allies a year ago, so would he really want to do that again? It appears unlikely, but you never know. The last possibility is that Macron could, of course, resign himself and force presidential elections. Now, he absolutely categorically ruled that out just on Friday. So that appears to be off the table. So it would really be the first two options, and the most likely appears to be naming a new prime minister. But again, finding that person is really quite difficult.
Yeah, will they have any better chance than the current Prime Minister, of course, is the question. And so in amongst all of that, it seems that France is now, or the Prime Minister, François Bayrou, is upset with Italy about poaching of high net worth individuals and other policies that he deems to be fiscal dumping. Take us behind this one then, Alan.
So that was a funny little moment, actually. In this interview last night, there were four reporters, TV reporters, interviewing Bayrou at the same time, and there were actually the question was about the way that the wealthy were fleeing the UK in the wake of the UK getting rid of the non-dom status and raising taxes on them, and then Bayrou said, "Oh, actually, the UK is not really the issue; it's really Italy." Or it's other countries that are engaged in fiscal optimization or fiscal dumping, as he said, and they used Italy as an example of that. But it really was, in many ways, it was a throw.
Alan? I think we've lost Alan, which is very unfortunate. He was in full flow. And it's got an interesting little aside to an interview that we've just had with the leadership in France and just trying to get an idea of exactly kind of who people are pointing fingers at. Anyway, Alan Katz, our Paris bureau chief. He will return at some point. He's going to be a busy man over the next few days and weeks. Let's stay with Europe and kind of stick with what we've been talking about. Suzanne Lynch is our Brussels bureau chief and joins us now to talk about the broader European picture and why Europe is struggling at this point, particularly when it comes to responding, of course, to President Trump. And we've been debating this a great deal, Suzanne, recently and trying to understand kind of where we go next. And the question we keep asking is Europe playing this correctly? Do we have enlightened sort of policy here, i.e. play up to Trump's weaknesses, effectively his desire to be flattered in order to get deals done? Or are we just basically bending at the knee of the new kind of, the new king of Washington?
Yeah, it's an interesting one. I think there is definitely a sense here that the Mark Rutte approach, people may remember his cozying up to Donald Trump at the NATO summit at the end of June and his daddy comments. Well, in some ways, this did work. The NATO summit went very well with Trump, European allies committed to the 5% of GDP spending on defence, and Donald Trump committed to keeping the United States committed to NATO. So that was a good result. We saw it too over the last couple of weeks when the Europeans got that last-minute meeting in the White House with President Zelensky and Trump. Now, we're still waiting to hear what comes from that ultimately, but it was a good coup for the Europeans in the sense that 2 days earlier, Donald Trump had been meeting with Vladimir Putin on his own in Alaska, and the Europeans were nowhere at the table. So that kind of flattery did work in that the Europeans got back at the table. But you're right in the sense that I think, you know, it's very much back to school here today, September the 1st, here in Brussels, and all the European officials are back at their desk. And it's been something of a bruising few months for Europe. They have had to accept this trade deal with a ceiling of tariffs of 15% from the US. A lot of countries saying that's not good enough. And on Ukraine, they've had to push themselves into the conversation. They have not naturally been at the table. So I do think that there is a bit of soul searching now as this new term begins here.
Suzanne, yes, and with that in mind, as policy initiatives from the US administration come fast at Europe, they might want to respond quickly, and as foreign policy priorities keep shifting and the world moves quickly, they might want to act more quickly when it comes to foreign policy. And I know that our reporting is suggesting that that's going to be something that Europe can do. What have we learned?
Yeah, we had some reports over the weekend. European foreign ministers were meeting in Copenhagen for a kind of informal meeting. But the issue is that the way the EU works, because it's a collection of 27 countries, it's sometimes hard to move forward with decisions. And some very significant decisions when it comes to foreign policy, for example, tax is another example, you need the unanimous agreement of all 27 countries, and that can stop a decision being made. So there was a proposal that we reported on from the Danish presidency. They're in the rotating chair of the EU Council at the moment, and they're talking about making changes to the system that in some cases this requirement for unanimity is abolished. So I think what everyone is thinking here is Hungary. The Hungarian government have been blocking different measures, particularly on Ukraine, for a year or two now. For example, they've talked about blocking Ukraine's bid to join the EU ultimately. So this is becoming a problem when it comes to everything from sanctions policy to a kind of joined-up thinking of defence. So I think the European policymakers and officials are trying to look at ways around this issue.
Suzanne, just very briefly, we're all excited about this new newsletter that's going to be coming from Brussels. Talk to me about what we're getting.
Yeah, this is our Brussels edition newsletter, so people may be familiar with it, but we're relaunching it today. So each weekday afternoon for European readers, this will be in your inbox, and it's just really bringing you the latest news from Europe. As we've just been speaking about there, Brussels is increasingly significant when it comes to geopolitics, economics, finance. So this newsletter, anchored by myself, will be giving you a snapshot every day of what's happening in Brussels, as well as pointing readers to some of the latest news from across Europe and here in Brussels, as well as interviews across our platforms, but very much trying to present and give that snapshot into what's happening here in Brussels each day.
Suzanne, thank you very much. Suzanne Lynch, our Brussels Bureau Chief, helping us take stock of where Brussels is on foreign policy, on its relationship with the United States and beyond. And we'll look for that newsletter. And, Guy, we're just getting some confirmation, really, of the PMI picture for manufacturing around Europe. The German number stands out as a little bit weaker than had been anticipated. The French PMI number actually coming in expansion territory, better than had been anticipated. The euro up 0.3% on a weak dollar day.
Yes, it was up pretty much already. Anyway, that wraps things up with some interesting data. The Pulse is coming up next. Plenty of great coverage coming up, and we'll continue the coverage throughout the day, despite the Americans being out for the session. This is Bloomberg.